my group and I will present about financial reporting issue for Zahara Trading Sdn Berhad. Zahara Trading is a small but creative business that specializes in handmade beaded handbags. During the COVID-19 pandemic, Zahara faced significant challenge. The company had to quickly adapt its business model to survive. In this presentation, we will discuss not only how Zahara responded to pandemic, but also the accounting issues that arose as a result. Our focus will be on applying the accounting conceptual framework, especially the characteristics of financial information. By the end of these presentations, you will see how financial reporting play an important role in supporting business survivors and decisions making.
2,000 years later.
Before COVID-19, Zahara business model was simple. They rely almost entirely on their physical store. Customers come in, browse, and buy handbags directly. However, when the pandemic started, lockdown and movement restriction caused customer visit to drop drastically. Like many small business, Zahara faced a tough question: how to survive when no one is visiting the shop? Their solution was to pivot quickly to online platforms such as Shopee. This allowed them to reach customers across Malaysia, not just in their local area.
To solve these issues, accountants rely on conceptual framework. The framework helps ensure that financial information is useful for decision making. There are two fundamental characteristics we must consider. Firstly, relevance. Information is relevant if it helps users make decisions. For Zahara, this means financial reports should clearly show the impact of online sales and delivery costs. If management wants to decide whether to continue online platforms after COVID, they need to accurate and relevant numbers. Faithful representation. This means information must be complete, neutral, and accurate. Zahara must not record revenue too early or ignore the expenses. For example, recording sales before delivery might make the business look healthier than it really is. That would mislead stakeholders. In short, relevant and faithful information ensures Zahara's reports tell the real story of how the business performed during COVID.
A few moments later.
Now, let's look more closely at factful representations. For Zahara, this has three main implications. 1. Revenue recognitions. If Zahara still carried the risk of the handbag, for example, if the customer has not received it yet, then revenue should not be recognized until delivery. Recognizing too early will exaggerate sales and give false pictures of performance. Free delivery promotion. If Zahara offers free delivery, the cost must be recorded as an expense. It should not be hidden inside sale revenue. For example, if Zahara sells a handbag for 150 ringgit and pay 10 ringgit deliveries, the revenue is still 150 ringgit, but the 10 ringgit must be appear as a delivery expense. The last one, clear disclosures. Policy must be disclosed in the financial statements. For instance, Zahara should explain whether they recognize revenue at payment or delivery. This avoids confusion among investor, creditor, or auditor. By applying this principle, Zahara financial report will truly reflect realities, not just optimistic assumptions.
The next characteristic is comparability. Stakeholders such as investors or even Zahara directors need to compare the company performance before COVID-19 and after the move to online platform. Imagine if Zahara suddenly changed its revenue recognition policy without explaining. Profit number might increase or decrease, but no one will know whether the change is due to real performance or just accounting methods. For example, if in 2019 Zahara recognized revenue at the point of delivery, but in 2020 they recognize revenue at the point of payment, then the financial results are not directly comparable. Stakeholders could be missed. Therefore, Zahara must disclose any change in accounting policy and explain the reason. Comparability ensures that the user can see the true effect of business decision, not just change in reporting.
A few moments later.
Another important quality is understandability. Financial statements must be clear and easy to read. Not all stakeholders are accountants. Zahara's investor, suppliers, or even small business partner may not understand technical accounting jargon. That's why Zahara should use simple language in their financial statements. For example, instead of writing complex terms, they can write, revenue is recorded when handbags are delivered to the customers. Delivery charges are recorded separately as income and expenses. This makes financial reports more user-friendly. When stakeholders understand the information, they are more likely to trust Zahara and make better decisions.
Based on all of this, here is our advice for Zahara trading. 1. Revenue recognitions. Follow MFRS 15. If Zahara is still responsible until the handbag reaches the customer, revenue should be recognized at delivery. If risk transferred earlier, then revenue can be recognized at payment, but this must be disclosed clearly. 2. Delivery charge. If customer pay for delivery, record them separately as revenue and expense. If free delivery is offered, record the cost only as an expense. This prevents revenue from being overstated. The last one. Transparency and consistencies. Zahara must be transparent in their policy and apply the same treatment consistently every year. This builds credibility with stakeholders and ensure the reports are reliable.
A few moments later.
To conclude, Zahara trading experience during COVID-19 is a clear example of how external events can force business to adapt. By moving online, Zahara managed to survive and even create new opportunities. However, this shift also brought accounting challenges. By applying the conceptual framework, focusing on faithful representation, comparability, and understandability, Zahara can provide financial information that is reliable and decision useful. This helps management make better internal decisions and at the same time build trust with customers, investors, and other stakeholders. So, financial reporting is not just about compliance, it is also about communication, trust, and the survival of the business. Thank you.